Hello, everyone. We're so excited that you're with us today. And today our title is Stop Trading Time for Money. And we have a special guest, Jay Kinder, one of my favorite people. And he is an absolute master at Stop Trading Time for Money. So Jay, welcome.
Hey, I appreciate it. Thank you.
So let's talk a little bit about, we're gonna be talking about all kinds of different ways. So one of the things that I want to start talking about is give us one of your top, well, let's just dive in, right? For the
right.
top way that's
Yeah.
giving you the most amount of money right now in passive income.
Yeah. I think it's such a great question. And I think it eludes us, right? Like we all probably read Rich Dad Poor Dad, 20 years ago. And we have this ambition to, build a successful business and have a cash flow, but then you gotta, you're trying to think about how do I not pay as much in taxes? And then hopefully I have some left over to invest somewhere. And where is the best place to put that? That's going to create me some passive income. Because the whole game we're all trying to play, like all of us are trying to play this game at different levels, but we're trying to get to a place where we have enough passive income coming in that covers our monthly bills so that we can stop trading our time for money and do the things that we want to do in life and be financially protected, right? And so I actually, as living in Puerto Rico the last 4 years, obviously we'll talk about, why I made that move and that decision and how revenue shares helped me with that, and paying 4% tax. This is great. Being here, but moving back to the States, which is what our goal was this year. The last 2 years, I had to say, what is my investment strategy? What is my philosophy on where I'm going to invest money and how I'm going to create more passive income by investing in whatever assets or whatever vehicles that are all out there? And so we just started doing all the research, and it came down to what was going to lower my taxes. That was a huge important piece of it, because that's the biggest amount of what you have is what you end up paying in taxes. If you cannot pay it in taxes and invest that money and get a return on that money, then you'd rather do that. And so apartments allow you to do that. I used to invest in single family real estate. And where did I buy? In Lawton, Oklahoma, where I was from. Because why? Because I knew Lawton, Oklahoma. I knew what a deal was. And, I thought, buying all these rental properties from all the books that I read, that was going to be what built the most wealth for me. What I didn't realize was that when you look at multifamily and you look at where you would invest, you start with the location first. What are the migration patterns? What are the diversity of jobs in the area? So me and Lawton Fort Sill, what I didn't know, at 29 properties that I'm managing, they're all over the place. They're all different ages. One needs a roof this month. One needs new carpet this month. I'm not seeing the decision of investing in Lawton would have been an absolute no, because it's 38% of its job source is coming from the military. So if there's a president that comes in and they cut spending in the military, it affects delinquency, it affects vacancy rates, it affects everything. But I wasn't able to see that because they're not all under one roof. They're all over the place. And I wasn't able to see that this was just not a good choice of a location to invest in, because it gets.
I'm so glad you said that, because listen, my mom lives in Jonesboro, Arkansas.
Yep.
When my dad passed away, and she married a doctor in Jonesboro, Arkansas. And now they decided that they wanted to buy all these rental properties there. I'm like, Mom, you hate Jonesboro. Why in the world are you buying rental properties in Jonesboro, Arkansas?
Yep.
I'm like,
and I'm telling you, I didn't know any better. I didn't know. It's like anything else that you find. It's you don't know what you don't know, and until you get. And for me, it's always been, and I haven't made a post about this. I just turned 47 3 days ago now. And, if you go back in my life and look at the decisions that I've made, it's always been around. I went to an event, usually reluctantly, and I learned something I didn't know, and I came back in it, and it ultimately changed the trajectory of my life. That happened for me when I went to Craig Proctor's event, and I sat next to a guy selling 400 homes a year, and I was like, how in the hell is he doing that? But I saw that it was possible. And I had never thought that way before until I saw a guy doing it. And I was like, there's all these people doing it. I guess it can be done. So there's a way to do it. And then I learned vacuum up as much as I could about how they did it. And I went out and did it. Same thing with EXP, went to an event, learned about it. I sat next to Rob Flick. He was making $156,000 a month. I said, how did you do that? He told me what he did. I said, I think I can do that. So I ended up coming to EXP. And the same thing happened with apartments. I got invited 10 times, didn't go the first 9. Finally go to one of Cardone's events, and I learned about investing in multifamily, what I never had learned before. And I feel like I was right. I'm in real estate. How did I not know this? But when you invest in multifamily real estate, like this property we have, Cityscape Arts, and it's a class A and an A plus location, meaning when you do all the research on the location, the job diversity, the shopping, it's downtown in the loop. You can't just build something there. There's no new product being built in downtown Fort Worth. There's none scheduled to deliver the next 2 years. Increasing the rent bumps, the way multifamily is valued is different than single family. And this is the big miss people get. You can have a single family property that you're renting out, and maybe you're making a little cash flow on that property, but it doesn't double its value of that property is based upon historical sales of other homes that sell. That's not how commercial real estate is valued. It's valued based on net operating income. So if you come in and you make it more efficient, you lower the cost as it costs to operate that, you raise the rents and you increase the net operating income, the valuation of that property goes up. So over 7 to 10 years, commercial property consistently doubles in value. So you go in, you invest in those deals, you can do a cost segregation, which is going to give you a negative K1 the first year against your active income if you're in real estate. That's a huge chunk. So about now it's at 40%. If Trump gets back in, it could go back to 100%. So you basically can take all the write-offs that you would write off, like washers, dryers, the age of how long windows last. You can take all of that and put it in the first year. You get a negative K1 year one. So now your investment, part of that is a tax deduction going in. And then you implement the strategy, the team that does this. You don't have to do this. You can be an LP invested in this deal, but the GP team is job is to find these deals, execute the strategy, raise the rents, increase every little monthly revenue stream that you attach to a property. Oh, we're not charging for pets. Oh, we're not charging for parking spaces, preferred parking spaces. There's all these strategies you can do. Like we looked at 318 units. I walked in Arlington before I came back to Puerto Rico. And we walked the property, 318 doors. And I think probably more than half of them don't have washer and dryer connections inside the unit, but they have big walk-in closets. It's just a matter of putting and on the other side is the bathtub. So you put in a washer dryer stackable unit, people will pay $50 a month more for that property. So they don't have to leave to go do their laundry. And then if you put the washer and dryer in there for them, so they don't have to buy it, they'll pay another $50. That's $100 a month times, 300 units. And then you multiply that times the cap rate of this property or divide it by the cap rate, you actually know what you're adding in value to that property. So when you go refinance on that property, now it's worth, so the one in Cityscape in year 5, we're projecting to be worth $21 million just with implementing $50 rent bumps. People don't move over $50, right? You can't move down the street. We're $238 below every other property. So if they leave and they go move into another property, they're going to have to pay $238 more for the same unit somewhere else. So we've got this room to slowly raise the rents over time, increase the value of that property. So in year 5, we refinance. I'm going to get 1.5 times. If I put $100,000 in, I'm going to get $150,000 of my money back. I'm still in the deal and I'm still getting monthly payments every month from my investment in the deal. I'm still in the same percentage, but I've been recapitalized tax-free because it's a loan. You borrowed money. It's a refinance. You're not getting taxed on that money. Now, and this is what people don't understand. Now I can take that $150,000. I can put it into another deal that's maybe earning 8%. Now I'm making 15% or 16% on my money. And that's how you roll your money and increase your, if we sell that property, I'm going to get a lump sum, 1031 that into another one. If we keep it forever, I get paid forever. It's an infinite return. So, but that property's value is going to go up if we sold it in year 10 and it's worth 26 million based on just the average rents go up in downtown Fort Worth over the last 20 years, 3.2% or 4.2%. In our pro forma, we have 3%, super conservative, saying maybe it's not going to do what it did the last 20 years for whatever reason. But that's what we put in the pro forma. If we hit those targets, I'm going to exit out of that property with a 2.2x multiple on my money. And so it's about putting your money to work for you, and it's invested in an asset. So like the other investments that I made, living in Puerto Rico, I meet all these rich people, all these billionaires, people all have great ideas, some of them good, some of them bad. But you're invested in private equity. So you're getting into deals that aren't publicly traded. They're not paying dividends. So you're not, if you put this money in the stock market and you got to, when you look at all the investments, like I'm trying to be super conservative because I'm not normally. I'm very, very I'm risk tolerant, too risk tolerant. And so, I'm trying to change my ways to, what is the safest way to get doubles and triples on your money instead of, hey, let's see, hopefully this thing works out over here. You're investing in deals that could go to zero. Like I had one I invested in called Hopper. And, I had my strategy for evaluating whether I was going to invest or not that I learned was this guy he had hundreds of millions of dollars and didn't put his own money into it, but he was raising all this money. So if the guy that's the founder of the company is not investing his own money in the deal, I don't invest, period. So Skydio, which is the second largest drone manufacturer on the planet, and they are leading in technology and leading in military application and all these other things. And the Lens, it's Michael Lens, who lives here in Puerto Rico, he put $250 million of his own money into this company. If he believes in it that much, I have to believe in, because you're betting on the team. It's not just the strategy, the idea, the company, and what they're doing. It's the team around them that you're investing in. So I would invest in that deal. But I started to create this philosophy about what I was going to invest in, and as I'm looking to move back to the States, because living on an island is great, but I promise you don't want to live here forever. You'll miss some things like Target. Ask my wife. And you'll miss some things about some of the efficiencies of the States. And you don't want to, I can't sit on the beach all day forever. This is not, it's not a forever thing. It was a good thing for me from a tax perspective for a period of time. But now I'm looking at, I need to invest in assets so I'm protected. They can't go to zero. They need to be cash flow day one, because a lot of these investment deals that people pitch me, even here, they're investing me deals about, hey, we're going to buy this property, we're going to demo this, and we're going to build all that. And then if all that goes well, it's going to pay out this, right? And then what happens is, well, that didn't work out. Well, we couldn't get this deal, or the cost went up over here. All these things happen, and you end up not getting this great return. Well, if you're buying assets that cash flow day one, meaning they're 95% occupied day one, and they're already netting $700,000 a year, the valuation of that property, the banks love loaning money on these assets. It's very clear what you're getting, and now you're just going and you're implementing efficiencies it's a business. Economies of scale. What can we go in and do and implement that's going to increase the valuation of that property over the next 5 to 7 years? And you get the double on the exit. So you get, a double of your money you put in, you get a refinance halfway through where you're recapitalized, you got all your money back, you're getting paid every single month, you're winning in the cash flow game. So if you invest enough money, you're getting a 6, 7, 8% return on that money. We call it the drip, your monthly check you get, and you're moving closer to financial freedom. If it pays your house payment, then it pays your house and your car, then it pays all your main core monthly expenses. And that's the game you're trying to get into. And then you get to a point where you have enough passive income, you can decide if you want to trade your time for money. If you want to go sell more houses to create more income, you can. Or if you don't want to, you don't have to.
Do you want to learn the proven blueprint to double your business with Chantel Ray? Then join our free call where we're going to teach you how to consistently double your closings, how to establish a dominance in your market, and how to maximize passive income. Learn how to stop trading time for money by creating multiple streams of income. Don't wait for your next client to come to you. We'll give you a funnel that brings them to you. Visit chantelray.com/double to learn more how you can get your free funnel. My thing that I'm the most passionate about is really stop trading time for money. I'm just say it. And the more I feel like I plant seeds, and then once I plant those seeds, they start growing and then they get bigger and bigger. But creating passive income streams instead of just relying on just sell a house, and then,
right. I call it the transaction treadmill.
Transaction treadmill. No, enough is enough. But one thing I wanted to mention that you said I want to highlight, earning a higher income is undoubtedly important, but it's also not the only factor that determines financial success. It's not how much money you make, but it's how much money you keep, how hard it works for you, and how many generations you can keep it for. And this is the thing. I want everyone to just start thinking bigger and start thinking outside of the box. So we're going to talk about, for passive income for real estate, but I'm going to also share with you guys some other things that I'm doing as well that's making passive income for me, multiple streams that we're talking about. So let's first start talking about if you are in real estate and you want to make rev share of why I believe EXP's model is the best, and why we merged with them. I want you to kind of explain the model a little bit of how people can explain it to other people, and also explain why you believe a little bit about how much money you're making on this, how new people, a lot of times people say, oh, well, you had to get in, 5 years ago if you wanted to be getting, you needed to get in on the ground floor.
Right.
Well, what is it, how you've seen people who've recently joined and have also made a lot of money? So
yeah, 100%. I'm just going to show a couple of slides just to give perspective, because it's important, I think, to understand exponential is a different animal. Okay. It's the eighth wonder of the world is how money compounds. And this model and the reason this comp plan for recruiting is such a big deal. First of all, everybody has to understand the reason this is disrupting, and every company from now on will all have revenue share and will all have stock, is because EXP completely turned the model on its head. Most of these companies that are out there, the legacy companies, all had regions and franchise locations based on physical location offices. Somebody would buy that. They would recruit agents within, a territory, and that was all their opportunity was. So, some KWs like you can't, you get to 200-300, and that's kind of you've maxed it out. You're probably never going to get more than a certain number of people to join a brokerage, and that's your opportunity if you bought that franchise. So agents never had an opportunity to make money from recruiting. So we never recruited unless you built a team. You tell people you like the place, you might get a card, a coffee gift card or whatever, but there was no compensation aligned to it. Because we don't have territories and we don't have anybody that owns any particular physical location and those agents in that area, it means you can recruit anybody anywhere in the world, and they attached a network marketing comp plan to the recruiting. So what that means is network marketing, and it's just so you understand network marketing. And I didn't understand it when I joined. I'd probably bought several things before, but never really truly understood it. Network marketing, it has a very aggressive compensation plan about how to take a product to market through word of mouth. People telling other people, telling other people, telling other people. It's just a model. It's a way to do it. You can sell your stuff through Walmart, or you can sell it's just a distribution channel, a way to take a product to market. So when you take that comp plan that's very aggressive, that allows you to make money off of people that you bring and people they bring and so on and so forth, there's multiplication at play here that is in no other business model. There doesn't exist. You can't go somewhere and get paid multiples off of people that are 5 or 6 people deep. In real estate, this was very, very aggressive to do revenue share off the top, not profit share, which is after there's all these expenses. If there's anything left, we'll pay you some profit share. By the way, Keller Williams just settled their lawsuit on profit share because they've been taking it away from people. I didn't get to read the article yet, but I'm interested to see how that went. But no, you could never know, well, if it's going to profit or not, because whoever's running that business can buy a bunch of furniture, they can redo the offices, they can do anything they want. So you never really knew with profit share. But this iteration that Glenn Sanford did is revenue share. It's revenue share off the top. It's a knowable number. You know how much you're going to get paid off of every agent as they close transactions. And where it for me, and I'll show y'all my revenue share. It's been this year, it'll be around $3 million in revenue share. I've recruited 70 something agents. If I was hired to be a recruiter, I would have been fired. I've only recruited about 3 agents a month or less for the last 7 years. That's it. That's the work that I did. Now my group, those people, they recruited 400 people, who recruited 700, who recruited 1,000, who recruited 1,500, who recruited 2,000 or 3,000 people. I get paid on all of that work that's being done. That's the leverage in the model. That's not me.
Hold on. Just stop sharing for 1 second. Okay. Stop sharing for 1 second, then you can reshare. Yep. So I need to make sure that I say this, because someone said it to me and I was like, this is true. So Canzel created the model where the first 3 levels open up right away. And guess what? EXP copied that model. So every one of you people who better be licking my shoe tops, because leadership told me the reason why that we have the first 3 levels open up is because we copied it from you. And we joked around and I said, that's fine, because I copied so much stuff from you. And we started laughing.
Yeah, no, it's awesome. And this was something that I think people kind of start to recognize this at a certain point, is when other people see a model that's working extremely well, which you can't argue that EXP's model is working extremely well. Fastest growing company in history to do what we've done. It's been an incredible ride. Not perfect along the way, a lot of challenges along the way, but pretty damn good, right? And so everybody that comes along, and Glenn said this five years ago, he said, there's going to be competition, and, they're going to, iterate on our model and try to make it better. And they've all come in and tried to do a little bit different this, a little bit different that. The benefit of being an EXP is like, if somebody comes out with something good, like Instagram's a great example, right? Like when, TikTok is doing, all this stuff and they're coming out. Snapchat comes out with all these new features. What does the number one player in the category do? Facebook comes out and says, boom, we're going to drop reels on them. And now anything that somebody else does that's good, we can just copy it because we have the most eyeballs already. We can take those things and adopt them into our model if it's better. And that's one thing we're agile. One of our core values is being agile. So when we see something that we like and we're all like, hey, this is good for agents. Like if we can unlock the first 3 levels for everybody, that's better because it means you don't have to recruit near as many people individually, and you're going to get more revenue share. You're more likely to stick with it. And so, we're taking things that we see and we're adapting and adopting and making our model better as other things that we see that come into the marketplace.
And you guys also copied that. You guys had one broker in each area, and then I said, yep, we're having multiple brokers in each area, right. And then you guys were like, okay, we're going to have more right. brokers in every area. So once you guys started getting to the point that you started copying all of my stuff, yeah, that made it better, I said, okay, we're going to have to do a merger here.
Right. It's the unfortunate and fortunate really, because being in the number one spot in the category, we can do anything anybody else can do. So if we see something better and it's truly better, then we want to be able to offer that too. And the same thing, Real had a co-sponsorship deal, and we looked at it, we talked to people at Real. I have friends at Real. I talked to them about it. Do you like it? Do you love it? What do you not like about it? What do you hate about it? What do you love about it? And we got this overwhelming response that everybody liked it. And so we went to leadership and we're like, listen, we need to do some type of co-sponsorship. And they're like, they looked at it from a tech perspective. It's going to take 12 months to do, but they were open to it. And we just rolled out our own co-sponsorship last week. And what that allows us to do is if I recruit somebody and I need them in my front line as an FLQA, as a qualified person, I can place them under somebody, and that revenue share stream will go to that person. So I'll lose out a little bit on revenue share by placing them under somebody else, but I get to keep the FLQA. Now I'm able to help people better, and I'm able to cross, pollinate with other people and partner with other people to add more value to an agent. If they need somebody locally to kind of support them, I can do that. So those are things that I love seeing, the iterations that are happening. And when we see something that's better, we're able to just adapt, adopt, and apply it. And so it is a key thing, but you are correct. We did copy that off of you. It's take it as a compliment.
I love it.
Right.
Yeah.
But I would be concerned if we're sitting here and somebody creates a model and it's better and we're like, hey, we should do this, and they don't do anything. I would be like, okay, we're sitting duck just for somebody to pick us off, if we're not going to try to get better. And that's not how Glenn operates. If it's better for the agent, he's going to say yes. And so, those are little iterations that happen over time. It's been fun to see that, we're not just, resting on our laurels. We're always trying to improve, and Glenn runs everything through a filter very simply. Is this going to be better for the agents? Then the answer is usually yes, if we can make it work in the model. And so, that's refreshing to me, because it would be very frustrating if I saw something better and we're not doing nothing about it. And again, this is where leverage happens, right? You go sell a house next month, you got to sell it again. You go sell 3 houses this month, you got to sell 3 again next month. If you went and recruited one agent, the difference, the multiplication from everybody recruiting just one person a month to 2 people a month to 3 people a month, look at the difference in how fast it grows, right? So, that's multiplication. So this is what is possible if you help people go bring a friend, help everybody else bring a friend. The multiplication is really where the opportunity is. And this is what, when I moved over to EXP, I did this math, and this is revenue share is a passive income, and that when you bring a friend over, they close a house, you didn't do nothing, and all of a sudden you get $800 and you're deposited into your bank account. I promise you're going to be really excited about that $800. Why? Because you didn't do anything for it, right? It hits different than when you close a deal. It's always great to close that big deal and make a $20,000 commission. That always feels good. But that money that comes out of nowhere, it starts to add up, and you start to pay attention to it. And the reality is if you're making $1,000 a month in passive income, any vehicle that you want, you have to have enough money to invest $240,000 after taxes into some vehicle. This is assuming a 5% return, so a safe vehicle. There's plenty of places you could put it that's safe. You could be more risky and get a greater return, or it could go down. But the difference is, look how much money you have to make active income to create passive income. To make $5,000 a month, you got to have 1.2 million. Do the math. How many years are you on a track to get to 1.2 million after taxes invested safely into investments? How long is it going to take you to do that to get to 5,000 a month? And EXP and revenue share, you can do it way faster. There's no investment of your money. So there's no restriction. It's just a matter of learning a new skill, which is how to invite agents to look at the opportunity. And so it's a skill like we were saying earlier, Chantel. I can show anybody on this call how to effectively call FSBOs and expireds and close more deals. It's a skill. And if you learn that skill, you can get better, you can convert higher, you can get listings, and you can eat off of that forever. And so, it's a skill that works in any marketplace. But it is a skill and it can be learned. It's the same thing with inviting agents to EXP. You can learn the skill of how to invite an agent and recruit 2, 3, 5 people every single month. And then we'll teach them how to do that too. The same process. It has to be duplicatable. Show them how to do it, and they can do it too. And now what's happening is it's not based on the work you're doing. It's based on, you get to a certain point where the agents in your organization are recruiting people, not you. And that's where the leverage comes from. It's not all about the work you do. It's not about you being a recruiter. It's about you finding people that also understand the goal is to get to passive income. And this might be the best vehicle to do that, given that I don't have millions of dollars set aside that I can invest into something to create passive income. So this to me was the catalyst for, buying assets and investing in other, asset-based, asset-backed passive income vehicles, if that makes sense.
If you have $240,000 and you put $240,000 in the bank, if at a 5% return, you're only making about $1,000 a month. That's it. So that's all you're making in passive income. So you have to find other ways to be able to make passive income, unless you're just, with that chart, you've got tons and tons of money. So with this, and again, we're going to teach you all kinds of different ways to make passive income, not just this. This is
Right.
just one vehicle that we're going to teach you. And when you start hanging out with bigger players and people who think big, you are going to start acting big. Just like what you said, you have to start shaking hands and start linking arms with people who think bigger than you. And then you will start thinking bigger. It's the only way that you can do it. And this is the reason why I made the decision to kind of lock arms with EXP, because the thinkers that they're there are bigger thinkers. And that's a huge piece of the pie.
I want to give this to you guys right now, because what I saw when I joined EXP was that there was nobody that had built a system and a process for how to do agent attraction. Nobody. So what I did, and this is what I always do, and it's not because I'm smart, but in fact, my quote is, I'm not the smartest kid in class. I always sit next to him. Okay. So, I think, I tell people I graduated in the top 25 of my class, but there was only 36 of us. Okay. So I'm not the smartest guy, but I'm really good at copying what works, right? So I've been very fortunate that if there's something I'm trying to learn, I pay whoever the best in the world is at it, and I go learn from that person, and then I go do exactly what they tell me, and that served me very well. And so what I put a link in here to the training that we created on agent attraction. It is a system. It is a process, and if you learn the system and follow the process, and every single slide in there, there's nothing missing. It is exactly how we've helped other people build a 1,000-person org from scratch. These are people that didn't have influence. They're not an influencer. They don't have a big following on TikTok or any of that kind of stuff. These are just average, normal people, just like all of us, that were willing to learn the process and execute what we taught. So I just put that in the link in here. It's all the training, everything. You can go through all that, and I highly recommend going through it and just learning it. And be a good student. What most people make the mistake of is they try to recruit. It's not recruiting. It's trying to help people. How do we help people? Find people that want some help. And it's not a hit list. It's a help list. And there's a lot of people in real estate that are struggling. So this is an opportunity for us to help them. And it's not heavy for you because we do all the work. All the systems and processes for production based, it's all there. So if you go to honeybadgernation.com, all the training, anything that you need in order to grow your business. There's no question, Chantel, myself, we can help you grow your business. There's no question. Y'all know that, right? If you want to go sell more real estate, we can show you exactly how to do that. But there's also an opportunity for you to create passive income.